welcome back. You're watching The Money Show, and this is Ye Diwali Muskan Wali. And let's move on to our very important segment, which is the question answer session. And there are plethora of funds available in the market to invest your hard-earned money. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? Today, I have with me Amol Joshi, founder, Plan Rupee Investment Services. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. So, Amol, good evening and welcome to the show, and wish you a very happy Diwali. In fact, wish you a Muskan Wali Diwali. So, let's begin with the question answer session. And I think, do I have the first viewer on the call with me? Okay, so let's take Paramita's question, and she says that she has invested 37,000 in Tata Digital Fund, and so far she's facing losses in this fund, and the amount has come down to 33,000. She wants to understand if she can switch to any other fund.
Kavita, good evening and thanks for having me over. Wish you a very happy Diwali too, and to all our viewers. Coming to question, this is what, Kavita, we have always discussed on this show about sectoral funds, either sectoral or thematic funds. Most of the times, investors enter into such funds or schemes because of blockbuster past returns. What happens, although, is in a theme, a particular theme, both your timing of entry as well as exit, both of the timings are relevant. Even if you get one of those timings wrong, your return expectation will not be met. Even despite of taking the equity kind of risk, you will not be compensated via the returns. Now, why does that happen? Is there are factors like geopolitical factors, there could be government regulations, there are technological disruptions, there is element of competition, any unforeseen kind of event happening in that particular sector, which doesn't affect the broader market, but it affects that sector and the companies, underlying companies in it. That's the reason, unless you are really a savvy investor, you should not go with sectoral funds. That's the word of caution for all our viewers. Now, coming to the question, heart of the question, if you are switching out Paramita, I would suggest that with a medium to long-term investment horizon and with a moderate risk appetite, I would suggest you can switch out from this fund to something like a multi-asset fund. Multi-asset fund, the fund that I'm going to recommend, ICICI Prudential Multi-Asset Fund, it consists of debt, that is fixed income asset class, as well as equity, as well as gold. So in an environment like this, when equity valuations are not really on the cheaper side and there is an element of uncertainty, I would suggest go for a multi-asset fund.
All right, so multi-asset fund is the recommendation, and we move on to our next query, which is from Nirbhay, and he says that he has invested in Aditya Birla ELSS fund, and there's a lock-in period. Obviously, it's an ELSS fund, and 1.15 lakh is locked in there, and he's invested 25,000 in Quant Tax Saver Fund also. Other than this, he has SIPs of 1,000 rupees going on in ICICI Pro Tech Fund, and after taking money out from Aditya Birla Fund, he wants to understand from where should he be investing this money. So the lock-in period is actually over for him, and the money that he has in his hand now, Amol, is 1.15 lakh that he wants to invest so far. So he already has a tax saver and he also has a tech fund. So definitely further diversification needed as far as his portfolio is concerned.
Yes, Kavita, that's correct. We always say that while viewers send their questions, it would really help if you share your investment horizon, whether you want to invest for 3 years, 5 years, 10 years, or for really short term. Such details, including details like what is the kind of risk appetite that you have towards a particular asset class, these details would help. But having said that, since these details are not present here at the moment, and all the portfolio shared by Nirbhay is from the equity asset class, we would assume that Nirbhay, you have a moderate to high or probably equity kind of a risk appetite. There is one quick message that I would like to give. If an ELSS fund's lock-in period is over, that is not necessarily it doesn't should not motivate you to switch out or redeem. If the fund is doing well, after the lock-in is over, treat it like any open-ended equity fund, now that there is no longer lock-in. Now, coming to the question, if I switch or if I come out of the existing fund, where should I invest? I would suggest for a high risk appetite investor, invest into a fund called HDFC Large and Mid Cap Fund. as the name suggests, this fund will get you exposure in both large cap as a market cap as well as mid cap stocks. But I also have additional suggestion. Do not enter in a lump sum manner in this fund. You should do an STP. STP stands for Systematic Transfer Plan. You'll have to invest your lump sum, existing lump sum that you have in hand, in a liquid fund, suppose HDFC liquid fund, and do a systematic transfer plan over next 6 to 8 months into the target equity fund, that is HDFC large and mid cap fund.
All right, with that, Amol, it's time up on the show today. Thank you so much for being on the show and helping our viewers on such a special occasion and helping them have a better Diwali. Thank you so much for being on the show. And on that note, it's time to sign off, but I'm going to leave you with our WhatsApp number and email ID where we keep waiting for your questions. Also, just in case you watch our show on YouTube, you can send us your queries on YouTube as well. That's the number 8657974571. That's the WhatsApp number, and the moneyshow@etnall.tv is the email ID. Thank you so much for watching. Goodbye.